one more time. There we go. Got it. This video's been live streamed. Okay, cool. So it appears that we're going live. Oh, well, this is exciting. There we go. There we go. I've got to put myself on mute, I think. Okay, cool. Right, so it appears that we are live in every sense, in person and for the first time on YouTube's. So welcome everyone. Thank you for the patience while I just clicked a few buttons, pulled a few levers in the background, and we're all ready. So hello, Bal, Ian, Joseph, Randall, hello, Ron. First time here, isn't it? We were emailing in the week. Hello, Ron, Tom, Vito. So we've got the usual early crowd, which is awesome to see. And let's get into it then. So just making sure everything's where it's supposed to be. Got the chat box on the other monitor. Right, let's do it. Let's get into it. So welcome welcome all. Welcome to the 2 or 3 people that are watching on live stream. So that's awesome. Sorry, I'm just it's a first for me. Bear with me. The novelty will wear off shortly, but nonetheless, we're rocking and a rolling. So today's session is going to be about an hour. We're going to talk all things swing trading. Specifically, we're going to go and look for some PopGun profits, which is just a fancy way of saying looking for these really tight contractions in price. We've got several to choose from that may offer some fast, short-term profit opportunities. So let's go and take a look at it. So if you are new to these sessions, and you're looking for things all stock market related and swing trading, then you're in the right place. If you're looking for underwater basket weaving, then you're in the wrong place and you've clicked the wrong button. Nonetheless, trading for me should be simple. It should work. That's what I try and demonstrate on these open sessions as much as possible, wherever possible on these Friday sessions. My aim and goal for each and every one of you is to give you the right tools, the rules, the software to assist you, a community to support you, and a mentor, me, to show you the way so that you get real results. I never had anyone to ask when I first started that, and I quite literally made every mistake that could be made. And sometimes I learned those lessons 3 or 4 times before I learned the lesson that I was supposed to learn. Nonetheless, what I will be doing is breaking down my number 1 strategy, one of 6 that I refer to as production line trading. And what this is for me, it's a simple rule-based system that's proven profitable. It is repeatable. It takes 30 minutes a day or less or longer. It's one of those dials that you can turn. You can speed things up. You can slow things down to suit your personal circumstances. One of the main things that one of the main ways that I trade is basically trend trading, buy the dip, sell the rally. But most people get this completely wrong. Just because there is a dip, it doesn't mean it's worth buying. So what we need to do is we need to add a qualifier. We just need to add in the context of a trend. It's such a simple addition, but it makes a world of difference. So I'm going to show you how to find a viable dip in an uptrend and conversely a sellable rally in a downtrend. And again, this is what makes a dip worth buying or a rally worth selling. It is backed by years and years of data. Some of it was painfully learned on the hard right edge of the charts before I could validate all these things by plugging the rules I'm about to tell you into an algorithm. And that's just a fancy way of saying rules. If this thing happens, then take this action. If this, then that. And that's all an algorithm really is. For my own personal journey, I'm trying to remove as much discretion as possible. All the hardest lessons, which is the posh way of saying lost a shit ton of money, have been as a result of thinking I was smarter than the markets. So with technology the way it is, we get to validate everything that we do before we actually do it. And this is the journey that, the 28-year journey is the culmination of, where I am right now. I don't really want to think about trading. I just want to put the trade on and walk away. I did a day trade yesterday. We're going to actually dissect that in a moment. And it did just that. Although I'm day trading, it doesn't mean that I need to sit there like a zombie watching every up and down movements. I quite literally placed the trade and then walked away and went shopping, did a little bit of a coffee run, a little bit of just relaxed. I was checking the prices because obviously it was a short-term trade. And if it didn't quite get to profit targets and show me some signs of exiting, then I was going to exit. So anyway, nonetheless, the point is I'm not sat here at the computer all day, every day. And that is the main thing that I want to do in my own trading. I want to get all the rewards of actively being engaged in the markets without being glued to the computer, without the time suck that's involved. So it's that fusion of active investing and, basically enjoying my life. So if you are new to these sessions, again, I can see a few more people just logging in. Hello, Andrew. Hello, Brett. Well, who else have we not said? Let me just expand the list. We've got Steve. We've got Soldierman. We've got Zeke. Again, you're late again. Another 100 lines for you, Zeke. Anyway, if you are new, the way that these sessions go is we're going to spend about 60 minutes together. And we're going to spend 2 minutes just for the noobs, just to introduce myself. We're going to look at the stock market. We're going to look at the trend trading strategy that I just mentioned. And specifically, we're going to look at something that I just named PopGun profits. There's nothing fancy about it. There's no textbook. It means different things. It's just a quirky little name. And what we're looking for is these tight contractions in price movements. I'm just looking for those pops. And we saw one of those about 10 days ago when the CPI numbers released. But prior to that event-driven movement, there was a tight contraction in pricing. We see these movements or these short-term patterns a lot in these bear markets. And if we're not in a bear, if you didn't realize, we're in a bear market, so we're seeing quite a few of them at the moment. So it's really rude not to take advantage of the opportunity that we have. Anyway, what I do, you can work more closely with me if you want to. This is as hard a pitch as I'm going to ever make to anyone. So this is my commercial intent warning. If you want to work with me, that's great. If you want to carry on doing it yourself and fumbling around for the next 3, 4, 5 years, that's great. That's your choice, not mine. But if you want to go further, faster and learn smarter and just plug into a system that is proven and profitable, then send me a message and we'll figure something out. If it's not right for you, then I'll put you off in the right direction. I can't say any fairer than that. You will be walking in the well-trodden path of people who have decided to go further, faster, smarter. I get people results in bear markets. The sell-off that we just mentioned, even when the markets are moving hard and fast, they're reporting profits, multiple profits, not an isolated instance. And this is kind of my promise that I made earlier. Like, I want to get people results. Like, I've got my results. I don't need to do this. I get a real buzz out of seeing people repeat the process, because it is a repeatable process that works time and time again. Anyway, the way you get maximum value out of the session today is like, comment, interact, ask a question. We are live streaming for the first time today. So if you've got a comment, pop it in the chat box. If you've got a stock that you want to assess with the algorithm that I'm about to show you, I can quite literally plug that into the tool that I use. And at the click of a button, we can see if it's worth trading or not. So pop a comment there and we'll get to that when I see it. And again, if you've got a question, pop it below. If it's relevant to answer, I will answer it in the moment. A quick warning before we do dive into the charts: there is no diamond handing. There is no going to the moon. I am not randomly doing things. I follow, if you've not gathered already, a list of rules. They are simple rules. They're there for me as much as you, because if we just sit here wondering what to do next, then it's very easy just to pop a trade on and lose your money very quickly. You've only got to go as far as Wall Street Bets and search loss porn. Hashtag it's a real thing. And you can quite literally see the number of people who are posting life-changing losses. And it should be life-changing profits, but people post life-changing profits because they don't have rules. And they're often just sat at the charts like a zombie, flicking through chart after 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 chart. And then they get bored and place a trade. And if you ever find yourself doing that, and you're ever asking yourself, if you're looking at the charts and you're asking yourself, where's the trade? Then that's what I mean by you're doing it wrong. What we should be able to do is, and this is what I teach all my students as a production line trader, we should be able to go, there's the trade right there. There should be no ifs, no buts, no maybes, no coulda, woulda, shouldas. We want to make a statement. There it is right there. And again, this is for me first. Selfishly, I want it for me because like I had that problem as well. I was often, where's the trade? Oh, let's try this and see if it works. That was me. Let's do this and see if it works. Now, fast forward 28 years, there it is right there. And then I can put the trade on, set my stop, set the targets, walk away, go to the shops, no matter whether I'm day trading, swing trading. We should be able to have a very rigid set of rules that keeps on the right track. Anyway, it's those rules that work for me. And again, another quick warning, it is boring. It's not exciting when you do it this way. It's not like it is in the movies. There's no buy, 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 sell, sell, sell. It's not crazy. It is boring because we're following, again, I call it production line trading. Being on a production line is really boring, but I think I'd rather make money and be bored than do the make it up as you go along method. And of course, I get my own results. Again, I'm just demonstrating, again, the broker statement on all of these that I am, doing it. I'm practicing what I preach. I always say to people, I'm a trader first and I'm educator second. I don't need to do this. I really enjoy doing it. What is more important to me is that my students get results, and they do. There's the day trades just from yesterday, actually. Very quickly, I put the trade on and quite literally just went to the shops. Again, more importantly, the students that I work with get their own measure of results, which is absolutely awesome to see. So again, as I promised you, just 2 minutes, a few more slides, and we'll hit the charts. My name's Phil Newton. If you've never heard of me before, I'm the guy that's talking right now with a weird accent. I like cake, coffee, books, flamingos. Yes, it's a thing. Everyone's got sling and flamingos of mine. I'm just a regular guy who figured a few things out. That's all you need to know about me. I'm just further along my journey than maybe some of you are. I'm no one special. I just figured it out. And again, as I mentioned, I've got this weird thing for flamingos. I don't know why. We've all got something, some quirk, but that's mine. I have got a crazy thing for them. Just recently, I did have the opportunity to go and spot some flamingos in the wild, or as close as to the wild as it was. Just a lovely place in the Lake District here in the UK. And managed to get we spent a weekend doing a whole zoo experience. The reason why I mention this is like, this was in the week, this isn't at the weekend. I get to do whatever I want to do. I want to live my life. For those of you who never heard of me before, like I've got Crohn's disease. I know what near-death experiences look like. Everyone's just had their own reality check. I had mine 20 plus years ago, whatever it was. I want to live every day like it's my last, because I know what my last day looks like. There's nothing worse than having a priest stand over you, offer you the last rites, and thinking today's the day. And I want to enjoy myself. And the stock market, again, the point is the stock market has afforded me that ability to go and do whatever I want to do. You can opt out of the recession. You can opt out of interest rates. You're not going to be bothered about like how much the price of fuel is at the pumps. The price is the price. If you want to go somewhere, you've got to pay it. And the stock market has allowed me this. And this is why I do these Friday sessions, is to help you get whatever you want for your life. Again, sitting on the beach doesn't do it for me, but if you just want a little bit of extra, that's cool. If you want a life-changing skill sets, then this is what I will help you with. Where's my, there we go. So I've been doing this since the 90s. I started hand drawing charts. For the last 20 years, been helping good people like you become world-class traders. As I've already alluded to, I am not a Wall Street guru. I'm not a financial professional. You should most definitely not listen to me and take anything that I say as financial advice. It's just my opinion. It is an opinion that I've learned on the hard right edge of the charts with practical in the trenches experience of what is working for me. I've done everything from day trading. I prefer all the way up to swing trading. I prefer that, and that's what I'll be mainly focusing on. Again, what I do can work on other timeframes. It's not exclusive. When you've got a robust strategy, you should be able to take it up and down the timeframes and from market to market. The ticker on the chart, it doesn't really matter anymore. It's just like, is it a profitable thing to trade? Yes, put the trade on. And that is literally all I'm thinking about these days. Anyway, legally, past performance is no guarantee of future performance, etc., etc. We're all responsible adults. Be responsible adults. It's your money, not mine. So always speak to a professional. What I can show you is that history does sing from the same song sheet and does allow us to find a footprint of what may happen tomorrow. As I mentioned, I have cracked the code. It's not just me saying that. It's my students telling me that it's simple to replicate. It gets results. I've helped thousands of people over the last 20 years plug into a system. The longer I'm doing this, the more methodical and mechanical and systematic it's becoming. It is tried and tested. I'm going to show you that. I can prove it to you, and then you can do whatever you want to do with it after that. Just like Emily has done, just like Joe, just like Anik, just like Kyle, just like Colin, Randall. Hello, Randall. You're my friend today. And quite literally lots of students who tell me that they're getting results. And these are all members of the very small and tight-knit community that I've fostered over the years that get results, and them posting their results on a regular, daily, multiple daily, weekly basis. And again, obviously before that, I got some nice emails from lovely people. And again, my own results are great, but again, what does warm the cockles of my heart is that my students get results more than anything. What I'm going to talk about is, again, if you've not figured out, it's called production line trading. It's boring. It is like a production line. It is a metaphor for what we do. It's rule-based, methodical. It is part of a larger system that we're going to touch on. Again, I'm just going to show you the mechanical aspect of it, and we can get into how to find and execute trades. So with that said, let's go nerd out on some charts. And before we do that, though, just a quick sidebar warning. I am a talker. We will run into squirrels. I will deviate, but I'll attempt to bring myself back on track. But with that said, let's go and look at the charts. You'll be all pleased to know that that's the last of the charts. Sorry, the last of the slides, more specifically. So let me just catch up on the, yeah, James, taking the heat off, Zeke's taking the heat off you. Right, so I don't see any questions so far. So again, welcome. We've got a lovely group of people. Hello, Shalita, is that correct? I pronounced that correctly. If it's not, correct me. We've got John's, we've got iPhone 2 in the list. Hello. I think I've said hello to everyone else. Well done. Well done, me. So let's get into the markets. The first thing that's, oh, thank you. Let's get into the markets. What I'm looking at more than anything, and let me just put the chart intentionally blank for a second. So the chart, there's not meant to be anything here. So what I normally focus on, first and foremost, and I pretty much say this every week because it's true, is to look at the percentage changes. Before the markets open, I get to see if anything weird's going on. And what you'll see over, it might not make sense to do this at first because you've got no frame of reference, but what you'll start to see is that the overnight futures will be plus or minus anywhere from 0.3 to, at the moment, about 0.7% up or down. It doesn't sound like much, but on the indexes, it is. So right now, there's nothing significant going on. We're at the upper end right now of a range of movement, starting to go into that 1% range. So that is the start of something interesting. Again, at the moment, this is a normal range of movements. So I'm not seeing anything exciting. When I'm away from the desk, that's what I'm looking at more than anything. You know, is anything weird happening? It could be a good weird, it could be a bad weird. The way that I manage my portfolio, it doesn't really matter whether it's an up move or a down move, because I have a bullish and a bearish side of my portfolio. So if we see a big up move, we'll make some money. If we see a big down move, we'll also make some money. So it doesn't really matter what's happening. It might just mean that I need to pay a little bit of extra attention to my portfolio. It may mean that there's some profits to be had while we're waiting for these big movements. Again, right now we're seeing that as a regular occurrence. So there is, you know, a little bit of extra funkiness in the markets. So I'm not seeing anything weird. And again, why look at the overnight futures? It could be that in Asia something happened. It could be in the European session something weird happens. So although the US market isn't officially open, the overnight futures, they effectively trade 24 hours. So we get to see if anything weird has happened anywhere else around the world that may be impacting the opening bell in the US markets. And we can act accordingly. Again, because of my luxurious position in Europe, I get to do that about 5 hours ahead of the US markets opening. And I can see well ahead of time in the European session if anything weird's happening. And if nothing funky is happening in Europe, then probably nothing's going to happen when the US markets open. And I can plan my day accordingly and go and do other things is the point. So again, the whole purpose of trying to find out, is there anything weird going on? It just means that I can unplug. If, again, from your point of view, you may have meetings to attend to, you may have something else, errands to run. But the point is, you don't have to lock yourself at the computer on a regular basis. If nothing needs your attention, then go and do something else. So next thing that I'll typically look at is, and we're going to spend some time looking at the markets, is like, what's the trend? So let's look at the framework, the rules that I use to assess opportunities, assess the trend, and find money making patterns. It's a really simple framework. And again, everyone knows who's followed me for any length of time knows what's coming next. We're going to look at 3 lines. There's 3 lines in the chart. There's a 200-period moving average, there's a 50-period moving average, and there's a 20-period moving average. There is nothing magical about the tool that I'm using. It's just a tool. It's a frame of reference that I'm going to use that is methodical and mechanical. There's no subjectivity in the average. And what I get to do is say, where is price in relation to these averages? That's all I'm doing. And what it means is that I can start making statements about the markets. Where is price in relation to the averages? Well, price is below all 3 averages, and all 3 averages are stacked downwards. You've got the 200, the 50, and the 20, they're inversely stacked, and price is below those 3 averages. So we're in a bearish posture. And when you know that framework, it's very easy to say, well, if the stack the other way, we've got a bullish posture. And when they're stacked the opposite way, they're in a bearish posture. So I'm going to be bullish over here. I'm going to be bearish over here. That's it. And it's a very simple framework. And when you know that, you can agree. We can all agree, because the hard part for most people is knowing what to do and when to do it. So we can now divide our attention between, well, when this chart, not the market, just when the chart that you're looking at is in a bullish posture, I'm going to be looking for bullish trading opportunities. This now means that I can start to buy the dip. Let me tidy the chart up. So my average prices are crossed over here. They're stacked as I refer to them, the 200, the 50, and the 20. So we've got that bullish posture. And now I can start looking. That's the trend. It's bullish. It is going up. That is a statement. Now you know that framework. There's no ambiguity. There's 20 or 30 people watching here on the in Zoom and on the live stream. We can all agree with that framework. It has happened. That is a fact. It is a statement. And most importantly, there's no ambiguity. I don't know why I'm waving my arms around. The camera's not on, but nonetheless, I'm waving my arms around frantically. We can all agree that that is happening. There's no subjectivity in the interpretation. Andrew agrees with it. Adrian agrees with it. Bal, I could go down everyone's names. Hello, Emily. I've just seen you pop in. Everyone can agree with that statement. It has happened. Great. I am bullish. You are bullish. We are bullish. It is a statement. I'm being a prick to emphasize the points. But it's a statement. There's no subjectivity involved. Now I can buy the dip in the context of the established trend. Remember that qualifier that we mentioned earlier? Most people get this wrong. They go, oh, let's buy the dip. And they think that this over here on the right, that's a dip. It's not. When you know the framework, you now know that there's the 200, there's the 50, there's the 20. They're all, inversely stacked, for want of a better description. The 200, the 50 is below the 200, the 20 is below the 50 is below the 200, and price is below all 3 of them. We are in a bearish posture right now. We are bearish. This is a bearish trend. I will be selling the rallies in a downtrend. We've got the qualifier, and there's no ambiguity in it. Right. So how do we find a Bible dip? How do we find a sellable rally? So again, let's go through the Bible dips. For most people, the bullish side of the equation is a little bit easier. So we've got price in a bullish posture. When it trends, we've got to let that first bit go. We've got to let that first bit go, because what we're waiting for next is for price to dip. And we're going to wait specifically for it to dip between, I'm just going to focus on the 50 moving average and the 200 period moving average. We can use the 20, but just for simplicity, if this is the first time you've seen it, I'm just going to focus on 2 of them. but we're waiting for price to come back to the 50, not near it, not close to it, not, it's kind of there. It is at or below the 50 period. We want to make a statement. Want to make a statement. It is at or below the 50 period moving average. That's what I'm looking for. 1, 2, 3, 4, 5, 6, 7, 8. Multiple 9s, 10, 11, 12. 12 opportunities to buy, insert your favorite Samuel L. Jackson expletive, MF in, dip. That's it. That's your opportunity to profit right there. Buy the dip. So that is a buyable dip. It's not an automatic buy. Let me emphasize that's not an automatic buy, but that is, or those are, then there is, I should really learn how to speak the Queen's English, the Queen's language. But that's your buyable dip. Great. That's when you're going to be interested. That's when you're going to pay attention. That's when you're excited to go, yes, this is my condition for a dip buying opportunity. So that when it accelerates back away from, they're your profit opportunities. That's it. Congratulations. Can I mic drop? Is that still a thing? Do the kids still do that? It's simple and it works. Oh, that's right. I've got to prove it to you. Hold on. It's not just me saying it. Right, here we go. Here's the magic part. We put those rules into the algorithm, add and sprinkle on the money management that I like to use. And the algo will say, which is the fancy way of saying the rules, the algorithm, the computer will fire off trades. So I've just highlighted and circled. Not all of them are profitable. Not all of them are going to work, but more are making money than losing money. That's what we're looking for. So the algorithm is going to put little tiny triangles on the chart for me. And what I can do is I can say, if I just did that, just do those things, nothing else, no discretion, no subjectivity, no interpretation, no wonder what the Fed's doing. Is Jay Powell doing anything? Is Yellen talking? What's the CPI number? Who cares who's tweeting what bullshit this week? No one cares. At the click of a button, I can say, is this profitable? I can look back over the last 20 years, the date at the top of the chart. This is the S&P futures, just for reference. I can look back over the last 20 years and say, if I'd just done this, buy the dip, sell the rally, and did nothing else, and didn't look at the news, the media, the tweets, I nearly said something else that could be interpreted as salmon pot, the twats, whatever idiots that you're following on the social medias that have a viewpoint, the talking heads, the media, the minutiae, the nonsense, it doesn't matter. None of it matters. That's what a positive expectancy strategy looks like. Congratulations, you've got it with my love. Go and do with it what you want. If you want to make money with it, that's cool. If you don't want to do anything with it, that's cool as well. But this is predominantly been what I've been doing for the majority of my trading career. So this is a daily chart. And this is, again, in what I refer to as swing trading. Now, I also want to emphasize, this is not compounded. So this is just, the number doesn't matter, 100,000, 5,000, whatever, pick your number, $1,000 in, and, quite a few pennies out. It's a non-compounded equity curve. So it's the same risk in versus out. So compounded, it's going to be even steeper. Pretty cool, right? Now we can do the opposite and sell the rally, as we've already. Let me zoom in on this one, because this is where we're in right now. This is the real-time situation. So now you know the secrets. The 50 went below the 200. So there's the 200. The 50 went below the 200 there. So at that point, I'm going to be bearish. So we're in a bearish posture at this point. So when price goes below the 50, goes below the 200, first trade gets fired off there. Bazinga. There we go. So the next opportunity is when price comes above the 20. It doesn't quite get to the 50 right there. But when price is in a bearish posture, I'm looking to sell the rally in a downtrend. And again, if you've been following this for any length of time, we were talking about this in real time. We spoke about it as that sell-off was happening. We were saying we're looking to sell the rally in a downtrend. And this is a mechanical statement. Now, we've also got, and this is what I'm going to spend a few moments on talking about as well, we've got a really tight contraction, a little pop in price. We've got lots of little pops here where we see, up a day, down a day. And again, now that I'm pointing out, you can probably spot them where you've got these clusters of price movements. So within that trend, the bearish posture, we can layer on, if we choose to, a little bit of discretion. It's not critical that we do it, but if you want to refine an entry, instead of waiting for price to push away from the moving averages or come to, this is the point where you can say, well, I'm looking to sell the rally in a downtrend. That's taken for granted. And if you happen to be able to read the chart in some small way, you can layer on a little bit of discretion if you choose to. It's not mission critical. It's not essential. It's like adding salt and pepper to food. It's going to enhance the flavor of the meal that you're already going to eat. So that's the best way of thinking about discretion. I found the trade I'm going to place today. I'm going to sell the rally. Now, if I want to, I can add these little PopGun, these tight contractions in price here to flavor the trade. You get again, the algo fired off the trade there, and we can get a slightly better trade entry there if we want to. Again, I keep saying it's not critical, but the choice is yours if you're confident to layer on a little bit of discretion. If you don't want to, then it's okay. Just take the slightly later entry. You'll make money. So right now is now the right time to take a trade. No, because that's our profitable move. I can't even speak English now. That's our profitable move that we're trying to profit from. So we're waiting for the rally in a downtrend. We're waiting for it to come back between the averages, at least to touch one or both. If it can do that between them, that'd be great. That'll set up this little PopGun trade opportunity again for us. So how do we, so again, we want to sell the rally in a downtrend, but what I'm focused on and what I'm just going to move on to is finding these little PopGun trades. Other than on the S&P here, there's potentially an opportunity to go and find these extra things, these extra layers. And I think it's fair to say that everyone can find these little contractions in price. So let's go and do it. So one of the things that we can enhance the flavor of the trade is to, again, go and find some of these tools. So let me let me go to a different tab. Okay, so let's go to the S&P. Right, so I've just put a different, bear with me. Sorry, I've got scribbles and dribbles on everything at the moment. So there we go. So here's one I prepared earlier. So we've looked at this previously, but these are some of the, so this is the SPY. So same chart, but as an ETF, SPY. And we can see that last contraction in price where it's almost up a day, down a day, up a day, down a day, up a day, down a day. And when you just literally look for those up a day, down a day, essentially it's going nowhere is the opportunity. That's the discretionary or visual interpretation. Again, I'm already going to sell the drawing tool's not working. I'm already going to sell the rally in a downtrend, but maybe I can enhance the trade on this. Now I've got a few different tools. These are just bog standard Bollinger Bands. I've got the I've got the setting on 50-period moving average. At the bottom here is something called Bollinger Band Width. So what it's looking at is the Bollinger Bands. How wide are they? That's what this tool's doing at the bottom here. It's not necessarily critical, but what I can do is I can start looking for these contractions in price if I want to by looking at the tool in a different way. So I've actually had a tool. There we go. I've actually had a slightly customized version of this, and I've had this tool just present data in a different way. You can do it visually. It's not that hard to do it visually, but again, because I want to look at a large number of instruments, I just need a tool to help me focus my attention. All my students get access to these tools. If you've not got it, just send me a message and I'll get it over to you. But what I've done is I've taken this tool at the bottom and turned it into a stochastic. So all that means is if the narrowest that the Bollinger Band has been in the last 50 days is 0, and that upper line here represents the widest the Bollinger Bands have been in the last 50 days, then that gives me that range, the stochastic. So what I want to know is, where is price from the widest that the bands have been compared to the lowest? So again, so here's a range where the Bollinger Bands have been really low at the bottom there. So that translates to this section of the chart here, where the Bollinger Bands have contracted. So what I can do is I can use that information. If I know that price is contracting, then Bollinger Bands must equally be contracting. And I can look at where the band width is, the current distance between the upper Bollinger Band and the lower Bollinger Band is. I can look at where that is in relation to its historical highest high and lowest low in the last 50 days. It's a bit of a mouthful, but does that make sense? Let me just pause there, because it's a little bit of a tongue twister of an explanation. I'm looking at how wide or narrow the Bollinger Bands are compared to themselves in history. I should have led with that example, shouldn't I? So that is what this tool over here on the left is doing. So what I can do is I can say, well, where has the Bollinger Bands narrowed? Now, at the moment, I think I've got the setting at 50. So the Bollinger Band is looking at a slightly, there we go. So it is looking at the 50 period moving average as its frame of reference, and it's going to measure the Bollinger Bands with a setting of 50, but it's going to look at the band width and see, are they wide or narrow? So right now here, for example, they're narrow. Here, they are narrow. And where's a different color? And there, they're wider. So that's what that bandwidth is showing there. As they expand here, then the bandwidth. So what I want to know is, if the highest high and the lowest low is 100 and 0, where is the bandwidth in relation to its history? So, for example, the SPY, it's around about 99. If the upper band is 100 and the lower band is 0 on the bandwidth, then the current reading is about 99. It's as wide as it's been in a long period of time, is the point I'm getting to. So if I look for, well, is there any reading here on the watch list? Because now we're up knowing that, I can use that information to say, well, are there any stocks that are narrow? Because when the Bollinger Bands are narrow, then we tend to get these little contractions in price. So I can focus my attention on, and if I just rank and sort, so all I did was sort that Bollinger Band width as a stochastic in a slightly different way from its lowest number to its highest. So the highest being something like SLG. And let me just go and show you. So right now, the Bollinger Bands are expanding. The band width is expanding, and we've got 100 as the reading. So these are as wide as they can be. And for any of our eagle-eyed traders out there, this is one of the trades that we placed. Lovely range breakouts. So we traded this anyway. So if I want to find these contractions, these little consolidations, again, we've got one there. For example, we can use the band width to say, well, if the band width is contracted and we've got a tight price cluster, then that might offer me an opportunity to get this pop in price that I was describing. So let's go and take a look at AMD. Why AMD, Phil? I'm glad you asked that question. It's right at the top of the list. It's got a bandwidth reading of 13. So what that means is that the current Bollinger Band width, that distance, as measured by here, is reading 13, 1-3. So if that lower blue band's the narrowest it's been, don't know why I did that, last it's been the last 50 days, the upper band is 100, and it's the widest it's been in the last 50 days, then it's got a reading of 13. So it's at the top of my list of, like, this is as narrow as the bands have been in a long period of time. So I can focus on those contractions in price, and I can visually inspect and say, well, actually, has there been a little cluster in up a day, down a day, for 4 or 5 days? What do you think? Is it possible that if price was to break that really tight, narrow cluster of bars, up a day, down a day, for the last 4 or 5 days, is it possible that we could see an explosive breakout. What do you think? So just using the tools that we have, it's possible. Absolutely, Emily. We don't know. We'll find out next week. We'll tune in next week for the next exciting adventure of did it happen? But the point is when we've got a clear objective, is okay, I'm looking for these tight up a day, down a day clusters that we've spotted on SPY. And they've been pretty good on the index. Let me go back to SPY. They've been pretty good. They've been pretty good this year, SPY. Come on, there we go. They've been pretty good this year so far. And is it possible that we can go finding them on other stocks? Because at the moment, they're happening about once a month on SPY. And if we can go and find them on 3 or 4 other things, then it could be interesting. And to be fair, the one that we're looking at on SPY right now, that looks like it's about to break. Cool. Again, we speculated that it could be developing. Where could this get to? Well, we've already established, we're looking for a rally and a downtrend. If you like counter trend trading, this is a great opportunity. There's nothing wrong with counter trend. I like to trade with the trend. There's nothing wrong with counter trend trading. But if you like to trade counter trend, this looks like a great opportunity. We already know that on SPY, it's what this SPY, this is one we're looking at. We already know that we're in a bearish posture. We want to sell rallies in a downtrend for a good swing trade. Doesn't mean we can't take a counter trend. The trade-off is going to be, it's going to be a shorter-lived trade opportunity. It might need a little bit more care and attention. And that's really the only reason why I don't, because I've already mentioned, I want to spend time away from the desk and not find reasons to be glued to the desk. There's nothing wrong with it. So if you've got a little bit more time flexibility to keep an eye on it, there's a counter trend trade right there. Let's go and see if we can find another one. So AMD, we've already looked at this. So we've got a tight cluster right there. It's possible that when that breaks, this could be a good, well, we already know it's in a bearish posture, a counter trend trade. If it breaks the downside, that could leg you into a swing trade. It's pretty cool. Let's take a look at some of the others. Again, I'm just going to go up to they're in the bottom 20%. So I've got one more to look at because, again, I want that contraction in price volatility. So we're at, so LNG is 17. If that lower blue line represents 0, the upper band represents 100. The current band width is 17. Now, in this particular case, we've not got a cluster of 4 or 5 days. Visually, I can see that we've got a consolidation over the last few months. 1, 2, 3, the last 4 months of consolidation. We've got multiple touches of the lows, multiple touches of the highs. So although we didn't have that cluster of 4 or 5 days that gives us a pop, maybe there's a bigger opportunity than just a quick punt over the next few days, because that's what these little PopGun setups are for. They're just like really small consolidation, really tight, and they usually, think about it like a coiled spring, again, just like you see over here, like a coiled spring, up a day, down it, up a day, down it. The move outs can be quite volatile when you've got these really tight clusters. That's why we're talking about, and it can just enhance or maybe even speed up the trade that we're already looking for. So LNG, we're at the range, at this larger range low. We've got a little bit of a cluster there. We've got the volatility, the price volatility as measured by the Bollinger Bands has contracted. Well, we've got 2 choices here. We've got 2 choices. We can say, okay, well, there's the range, trade the breakouts, or if price stays in the range, then I can trade the range reversal. There's no right or wrong here. What do you want to do? Like, although I'd like to trade the trend, this is when we spot ranges, there's 4 ways that we can trade. We can trade the break the range low, break the range high. It's not at the range high, so we can't do that. We can trade the reversal off the range high. It's not at the range high, so we can't do that. We can trade the reversal off the range low. So it's either a breakdown or a reversal, up or down. Unfortunately, we don't know what's going to happen until it happens. So we can look for a trade entry on the breakdown. We've got an attempted breakdown there. So below I couldn't read numbers for a moment there. $120, below $120 on the breakout would be interesting. I like to use these little V-shaped patterns, so I can use the apex of that V. So maybe above $135 and trade that up to $145. That's a good opportunity there. Again, quick trade. It's not huge runaway movements, but there's opportunity if you look for it. So let's go down and look for some more opportunities. I'm just going down to my, we've looked at the top 25 stocks. My next group of stocks is the next 25, but I can look at one or two here. So let's take a look at Starbucks. It's at the lowest Bollinger Band contraction points. It says 0 because the bands are quite narrow. Same as LNG. Now we're looking at this. It's been quite tight for a couple of months. We don't really have the up a day, down a day that we're looking for, but we still have a consolidation. Maybe that's up a day, down a day on the weekly charts, or up a week, down a week. So again, don't really see the daily chart. Again, we're going to look for those little daily pops. Let's take a look at TTM. Not really seeing it there. Again, we've got the bandwidth contraction. Now we're looking at, again, same sort of thing where we've got consolidation over two or three months. I've not really got that tight contraction in price. Last one, let's take a look at Citigroup, and then we'll move on to the next batch of stocks that I like to look at. Actually, we've got two things here. We've got that tight contraction there, up a day, down a day. On this is Citigroup. We've also got, like LNG, a larger consolidation. So this really tight cluster. And as you can see with the bandwidth, it's starting to expand. So this could create a nice volatile break. I'm aiming for a breakdown here. In line with the overall trend. So Citigroup could be really interesting. So now we've got a stock that looks really interesting that could have an explosive breakout because of this really tight up a day, down a day consolidation. I like that. Do you like that? Can you see what I see? I promise I won't break into song. Do you see what I see? I've not got a multicolored dream coat to wear either. But do you see it? When you've got a little framework, you've got a clear objective. What am I looking for? I'm looking for these tight clusters in price. Why? Why are we doing this? Why are you going all discretionary on me, Phil? Because we've spotted last week and the week before, the last couple of weeks, these tight clusters in price, and they've led to these explosive breakout moves. So we've got this temporary observation where it may give us some fast profits in a short space of time. Okay, that's my objective. That's what I'm looking for. That's the end. That's at the end of the production line. That's the completed product. Great. Let's backtrack to the beginning of the production line and let's go and look for them. We've got one on SPY. We've got one on Citigroup. We've got, what was the other one? One on AMD. Let's go down to the next list. The next group of stocks I can go and look at. I've got three more to look for. Three more that are under the contraction in price volatility. So there's a good chance price is resting. Let's check out the first one, KEYS, Keys. Keys, again, we've got the contraction in volatility. Over the last couple of days, up a day, down a day, it's not quite the same. Not quite the same. I don't really see it in the same way. We've got a tight cluster there. I don't see it in the same way. It's almost, it just doesn't quite look right. Almost. If there's, I'm just want to pause it. If you ever catch yourself saying, well, it kind of looks, maybe, we don't ever want to go, is it there? There it is. There is the trade. Let's go back to SPY. There it is. Up a day, down a day, up a day. Lots of examples there. Up a day, down a day, up a day, down a day. There it is. Let's go to Citigroup. No, we found one. Up a day, down a day. There it is. That's what we're looking for. I want certainty. When we go to Keys, well, it's kind of there. I've not got a great amount of comment. It doesn't mean that it's going to be, because I'm applying just a little bit of observational analysis. I want to look for certainty. And I think if we were going to choose anything, I think if we could only choose one of the things that we've looked at so far, of the three that we found, I think Citigroup would be the one that I would trade because it's the clearest one. It's the easiest to go, oh, there it is. There it is right there. And I think if you have that filter when you're placing trading or looking for trading opportunities, it's going to give you a little bit more of confidence. Oh, there it is. There it is right there. There's no ifs, buts, maybes. I think it's when we start to have this, well, you know, it kind of coulda, woulda, shoulda, maybe. It can't, it's all, we'll do it and see what happens. No, we don't want to do that. We want to go, there it is. So let's move on from that one. Hopefully you illustrated the points. What's this? Pure PST. Can't speak today. Put my teeth in. PSTG. pure storage. You've got a contraction in price volatility. They're pretty wide anyway at the moment. Again, now I'm looking at this. I've got a tight cluster. It's already started to break. I think there's a kind of a larger pattern at play. Again, catching myself doing the same thing. Kind of, woulda, coulda. I'm not sure. Let's leave it alone. Spot IFI. S-P-O-T. S-P-O-T. Spot. Spot the difference. I think it's really clear that you've got this tight cluster right there. Price volatility is contracting, that the Bollinger Bands are narrow. We've got a little bit of recent history to say it happened previously. Tight cluster in price right there. Tight cluster, contraction in volatility, which led to an explosive breakdown in this case. So again, we've got that tight cluster on Spotify. It looks like it's about to move higher. So maybe this can provide potentially a day trade, maybe a short-term swing trade over 2 or 3 days, 4 or 5 days, because that's what we're expecting. That's what we're looking for. That's the objective. That's the end of the production line. That's the completed picture that we've been looking at. We've backed into finding a quick way to find possibly some explosive movements in the current market environment. That's pretty groovy. I like that. Let's take. Does everyone kind of get that? Does everyone? I'm just going to a different time frame for once. Spot SPT SPOT. Does everyone get that? Let me just pause there. Yeah, absolutely wrong. We'll take a look at BA in just a moment. So I just wanted to go and look at the Spotify, that Spotify trade that we were just looking at, because they're already breaking out in real time. This is spot on a 2-min chart. Again, I'm just illustrating. If you wanted to stay on the daily chart, you can do. If you want to drop down to lower time, which I don't often do because the trade-off is you're now at the desk, there's that consolidation that we just looked at. Now, over the last couple of days, I've already got it marked off because I was talking about this with some of my traders. You've got, over the last 2 days, a smaller consolidation inside this larger consolidation. So you can trade these patterns in the same way. So if this was to break out here, I wouldn't automatically, if I wanted to refine the edge, I wouldn't automatically break or place the trade because you've got this rally on the 2-minute chart. So you want to wait for the retracement. So you can still look for those dips, the rallies, the dips in an uptrend. So you can combine the same trending principles on lower time frames with a higher time frame. Again, the trade-off is more time at the desk. Keep that in mind. I rarely do it because I want to spend less time at the desk. But if you've got more time flexibility, or maybe you're a little bit eager than I am these days to spend more time at the computer doing it, then you can certainly refine things across timeframes. Again, I like to one time frame it. So whatever time frame suits you, you can there's the same thing on the 60s. I'm just trying to highlight it. If you want to, instead of going really fast day trading style, you can slow things down and pop it on the 60s. Again, we're not broken out yet. There's no action to take right now. Wouldn't worry about it, but there's something for everyone on any time frame. This is that dial that I mentioned. You can speed up the production line that you're trading by going to different time frames, or you can slow it down. Let's go back to the daily charts and slow it down so that, it's a nice relaxed pace. My decisions are made at the end of the day with a daily chart. That's pretty cool. That's where I like to live at the moment. So does that make sense? Is everyone happy with that? This is just using Bollinger Bands in all of their variation in the watch list on the left, and the platform I'm using is TradeStation. I'm just seeing the question. It allows me to put, these are the Bollinger Bands. I'm just going to put Bolly Bands. That's what these are. John Bollinger invented them. This tool is the Bollinger Band width. It measures the distance between the upper and the lower band. And it also looks back over a period of time. I've set mine to 50. So it's going to look back at the highest high, the lowest low, or the lowest band width in the last 50-day period and say, is it really wide or is it really narrow? And with that information, I can have it presented in a watch list on the left so that I can rank and sort a lot of instruments so that I can quickly scan and zero in on the 2 or 3 stocks that make the most sense. So I don't have to look at every stock every day all of the time. That's why I went around the houses, chased a few squirrels, got there. And when you looked at 5 stocks, I'm not looking at, there's 100 stocks on this list. I'm not looking at 100 stocks every day. Now, in fairness, when you first start out, you probably look at more stocks than necessary. But when you can get used to like the end results, the blueprints, what's the completed product at the end of our production line going to look like? And then we back into it. How are we going to find it? What are the component parts? And then we can go, okay, well, this, and this is a hallmark. Again, let's go back to SPY. Is a hallmark of what we're looking for. There's our footprints. There's the footprint. Okay, well, what consistently happens around these footprints? Okay, great. Now I've got a footprint either to do it visually, or I can go scanning for them is what we've done, and just zero in on the 2-3 stocks that make the most sense to look at right now, that offer the biggest potentially explosive opportunity. Right, let us take requests. So Ron was asking about BA Baracus. No, Phil, not the A team. Let's take a look at BA. I always used to get this ticker confused because in the UK, BA is British Airways. It just grinds my. It's Boeing. So BA is, well, you tell me now. You know the secret, Ron. Are we in an uptrend or a downtrend? Let me just zoom out. So we're looking at about 12 months in time. Are we in a bullish posture or a bearish posture? Bullish. We're in a bearish posture. Great. So what do we want to do? We want to sell the rallies, don't we? Oh. So we're in a bearish posture. The 50 is below the 200. We've got to be in a bearish posture. So any rally between the moving averages is an opportunity to sell the rally in a downtrend. Yeah. Sell the rally in a downtrend. Cool. Looks like it's coming back to the 50. You can see I've already got one of my trades marked off. I'm a little bit early to this party. One of the things that I like to do is trade options. I use the full price, the premium, to trade the option. So I've got this built-in stop loss, and it means that I don't have to use a stop loss because the price of the option is fixed. Again, if options are brand new to you, it's just like a deposit. What's the worst that can happen? You'll lose your deposits. So I don't need to trade a stop loss or a traditional stop loss. If you're trading stock, you obviously would need a stop loss. The algo is going to fire off a trade. That's fine. The algo is already in. I'm already in. I'm sitting through a little bit of a retracement. I'm just waiting to be right. That's all I'm waiting for. So sell the rally in a downtrend. When it goes back below, so technically the algo is fired off. A little bit of sidebar here. Chase a squirrel. The algo has fired off. The rules that I described to you earlier in relation to the 20-period moving average have said, you know what, now's a good time to get in the trade. It's not fired off an opportunity at the 50 because it's not there yet. So just because price is at and I'm going to use the term loosely, a better price than it was when the algo fired off, doesn't mean that you should place the trade. Did I articulate that in a sensible way? Just because there is a better price now on offer than the algo originally fired off doesn't mean it's a better trade. This is a huge, huge point. It's simple to explain, but hopefully you get it. There is no such thing as a better price. If you're not in this trade already and you're sitting through a retracement, that's good. Maybe you've dodged a bullet. Maybe you've avoided the one or one of the ones that didn't work out. Again, we'll only find out afterwards. So the way I trade this, if I wasn't in the trade right now, there's my algo trade entry. If or when price resumes moving down and goes past my ideal entry, I will place my entry at the ideal entry because it's moving back in my favor. Just because price is a little bit higher, I can get a slightly better price. It's no big deal. Don't convince yourself that it's a better trade. It's not. Trust me. That just delayed gratification if you've missed the ideal entry compared to right now, assuming it's the first time you're looking at this setup, is it's saved my bacon more times than I care to count. So again, always get the price you want, that you should, the ideal price. It might be a little bit later than you planned. It might be a little bit earlier, but it's always the right price at that moment. Again, this rally, what if it keeps going up? We're already established the market is going up. We're expecting a rally in the markets. Maybe we can avoid a trade that we shouldn't be in, or at least from a timing point of view, we can delay the entry because maybe it does resume the down move, but we've just delayed the trade by, well, in this case, 4 or 5 weeks, because I'm clearly way early. Anyway, there we go. What else have we got? So let me just catch up with the chat. Hopefully that helps, Ron. What we can also do is we can fire it through the algo and say, if I was just to trade the rules long term, is this a good one to trade? Why am I showing you this? Is it a good stock to trade? Yes, it is. Great. I want to sell the rally. I don't just want to sell one rally in a downtrend. I just don't want to buy one dip in an uptrend. I want to do every one. I want to do all of them. I don't know which one. I don't know which trade's going to work. I've just pretty much explained that in a different context. I don't know what's going to happen tomorrow. No one does. I just know that on average, historically, it does. So I've got to take this trade. With the benefit of hindsight, I'm a little bit early. I only know that with hindsight. So I've got to place the trade at the time that it sets up with the consistency and the frequency that they set up, and take the next trade, 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 so that I can emulate an on average performance. That's it. That's the boring part. It's a production line. I'm not hunting, although we've looked at a little bit of a discretionary twist with a temporary short-term pattern. And it is a temporary short-term pattern. You see it in bear markets. It's just going to enhance a trade. It's going to flavor a trade. I'm already going to place the trade, but maybe you can refine the entry with these little PopGun setups. But for the regular swing trading, again, I'm going to place every trade. I've got to place every trade. The data says to place the damn trade. I've got to. I'm a little bit of a jerk about this. I recently learned this lesson the hard way, the very hard way, more specifically, the expensive way. I've got to place the trades. I am not smarter than the system. The last time I learned this lesson was just after the 2020 crash. I wrote that bugger all the way down. Loads of money. And then gave a good chunk of it back because I started to thump my chest, stroke my ego, and look how great I am. I'm going to trade my opinion this time. And I filled my boots. And it was in a very expensive lesson. I'm not shy to admit it, but these are lessons that we learn. It's not the first time I've done something silly, like trying to trade my opinion, but it's the last time I'm ever going to trade my opinion. I'm going to place trades anyway. The algo says place the damn trade. I can enhance the flavor of them with some of the discretionary stuff that we looked at. But if you're not there yet, it's not critical that you do it because I'm going to place the trade anyway. Right, let's look at let's look at AMD. AMD. Why are we looking at AMD for? Glad you asked. This is the let me scroll all the way back on my. This is the trade that we went through yesterday. I do occasionally day trade. I was at the desk and I was looking for a trade. So it's rude not to. When the trade is there, you got the broker statement at the top there. It was lasted about 3 hours. Let's go and look at it. All the same principles. These little PopGun trades. These little PopGun trades that I was just describing to you. We found one on Spotify. There was also one on AMD. Let me just pop this full screen. There was also one on AMD earlier in the week, day before yesterday. So there's that consolidation, but in a different context. So again, this consolidation here would be up a day, down a day, up a day, down. It's going to be a narrow, this PopGun type setup. So if you want to find them on the daily chart and trade them on a 2-minute chart, you can do. If you don't have time to trade them on a 2-minute chart, it's not critical that you do. Think about the time that you have available to trade. If you don't have time to look at the charts and trade the lower time, that's okay. If you don't have the resource to it, that's okay. But the choice is there. You can trade the same patterns, the same setups on any time frame is all I'm trying to get to. When you've got a strategy that works and a systematic approach to find them, then trading becomes easier. It's not easy. Don't get me wrong. I'm not going to confuse anyone into thinking that this is easy, but finding opportunities regularly becomes easier. It is simple to do when you've got a list of rules to follow. If it was easy, everyone would be doing it. It's really difficult what we do, more from a mindset point of view than anything else. But the skill of trading, it's a list of rules. It's learnt. So you've got a good portion of the rules that I follow. Anyway, saw a squirrel, chased it. Consolidation, standard stuff. Average prices crossed down. You've got the breakout move there. You've got your rally in mechanically the bearish downtrend, but also after a breakout of a consolidation. Can everyone, now you know the rules, when it goes back below the 50, there's the 200, there's the 50, there's the 20. I was a little bit early on my entry. There's the 20-period moving average. I went to the shops about here. I got some burgers, some fresh milk. I did a little barbecue yesterday. Keep in mind, I'm 5 hours ahead in the UK. I'm often early to trades, but I'm never going to be late to the party. So you've got the sell off, the rally back to the 50 there. You've got another opportunity to get on board. There's the 20-period moving average right there. Would you sell this one? Well, you're day trading. You know, the majority of the move's probably over. The average day's move has been done at that point. So you've got a few little finessing and fine tuning because you're looking at a day trade. But the trade is done. The trade is done. How do we know it's done at that point? I mean, we obviously know with hindsight, but typically with consolidations, the height of the range, oops, let me just get a nice little tool. The height of the range can be added to the breakpoints to give you a target. Height of the range, there's the consolidation, and deduct that to the bottom of the range. So in case you're wondering why I exited here, like that's the potential. That's standard stuff. That's in every textbook that talks about consolidations. The height of the pattern, the consolidation, in this case, because it broke down, deducted from the bottom of the range, gives you 100% extension of the move. So would you sell that rally in a downtrend after this pattern? Probably not. It's only a day trade, remember, we're not swing trading, but the same swing trading principles can be used to find the same trades on any time frame. Does this help, folks? Does this make useful? Again, pick your poison. Probably the wrong words, but there we go. Pick your poison. Let's check out Spotify. Last thing, let's check out Spotify. We found an opportunity on Spotify. So there is, I'm going to look at it on the context of 60-minute charts, because I've got to admit, I don't really have time to babysit these bad boys at the moment. I've got things to do today. So we've got a consolidation, 60 minutes. That's the up a day, down a day. That's that PopGun setup that we found on Spotify. So what are we doing? We can see there's a little bit of a breakout there. It's peekabooed above the high. We don't buy rallies. Again, I want to trade the first pullback after the breakout. So it needs to break out, needs to pull back, and then continue. We just saw the same thing on the bearish side on the 2-minute charts. We can do exactly the same thing on a 60-minute chart. Or if you don't have time to wait for that, you can just put the trade on the daily charts. There's the daily charts. We can put the trade on the, there's that PopGun setup. You can put the trade on the daily charts. When price is past the boundary highs, phone's ringing, when price is past the boundary highs, which it's almost there, if you swing trade, you don't need to be in a rush to this. Just do it later today. Again, if you're not on the 60-minute charts, you're not on the 2-minute chart, you don't need to finesse the entry. You just stay on the daily charts. The last half hour of the day, is price above the consolidation? If the answer is yes, place the trade. If the answer is no, if it's back in the range in the last 30 minutes of the day, come back on Monday. You know, it's a very simple decision. And I think okay, James, thanks for your comments. If you think about making decisions binary, final comments, I've just realized the time, we're a little bit over budget on the time here. I'll start wrapping up shortly. But the final thought is, like, make your decisions binary. For me personally, this was a huge leap forward in my own development when I started thinking about how can I turn a discretionary assessment into a binary decision? Well, we've got a consolidation. Great. Okay, that was a discretionary decision. Just mark off a boundary high, mark off the boundary low. Don't worry about trying to call it something. Just say, there is the boundary. Make it a statement, like we were talking about earlier. And then say, okay, well, if you swing trade on a daily chart in the last 30 minutes, why the last 30 minutes? Quick sidebar, because that's when all the institutional traders play. Novices and noobs play at the open. Often they get it wrong. There's a lot of liquidity there. It is fun to play the open, but the institutional money comes in the last 30 to 60 minutes of the day. So if price is above your consolidation in the last 30 to 40 minutes of the trading day, place the trade. If it's not outside the range that you've defined, come back tomorrow, or in this case, Monday. And then your decision to place trades becomes binary. And as we've just established, it's really easy to find lots of opportunities. So if you don't get it today because you missed it or your schedule is a little bit wonky, don't worry about it. The markets have been here for hundreds of years. I've lost count of the number of trades that I missed. I missed one earlier in the week. I was sat there ready, waiting for it. I was at the desk. It was coincidentally another day trade. I was at the literally fucking at the desk. Ding dong. The postman rang, didn't he? Postman needed something signed for. I got up, walked away, signed for the damn parcel, came back. The trade was done. I'm like, I was literally sat there at the desk. The point is, you're going to miss trades. You're going to miss trades. Get over it. There are plenty of opportunities, and there's always something. And if you consistently keep missing trades, then maybe you're on the wrong time frame. Again, I'm now kind of talking about lower time frame stuff at the moment. I normally dance on the daily charts. If you're on the daily chart, you should never miss trades. If you are missing trades, you're looking at your universe of stocks is too many. Give yourself 25 stocks to start with. That'll give you plenty of opportunities while you get used to a process. If you want more, add more. Go to 50 stocks as your universe. I look at around about 100 stocks. That's it. That's my universe. I'm not looking at everything. I'm not trying to look at every stock every day all the time. I'm just trying to look at which are the top 50, the top 25 best performers for this style of trading. I've got an algorithm. I can, at the click of a button, I can go, is this a good stock to trade? Yes, let's look at BA for the next year. Nothing else but BA for the next year. Cool. See if we make some money. So you don't have to trade everything. Just find one stock, one instrument, one time frame. A little bit of Freddie Mercury, a little bit of gimme fried chicken. Just need to do one thing. Just do it well. Be a specialist. Anyway, I think I've outstayed my welcome. Thank you all for spending it with me today. Oh, wrong slide deck, Phil. Where are we? Where is it? Oh, I've lost it. Where are we? There it is. So that was PopGun Profits, a slight twist on what we normally do, layering on a little soupçon of discretion based on an observation that, hey, we've got these really tight consolidations. They often lead to explosive breakouts. Why don't we go hunting for them? That sounded like a great idea, and that's what we did. So if you need a little bit of assistance, if you want to go further, faster, smarter, if you want to plug into the complete list of rules that I use, we've just touched and barely scratched the surface. You can work more closely with me. Just click reply on the emails. Any of the emails that you get from it, let's start a conversation. I don't know if what I do is right for you. If it is, we can have a long conversation. If it's not, I'll always point you off in the right direction. What we've looked at today was a part of the mechanical part, a very small part of it, of the mechanical system that makes up the entire production line process that I help people with. My ultimate objective is to give you the right tools, the rules, the software to assist you, the community to support you, and a mentor, me, to show you the right way. I never had anyone to ask when I first started. I made every mistake that you could make. I still make mistakes right now, but I learned fast from them so that you don't have to, so that you can plug into real results in the fastest and smartest possible way. So if you want a little bit of a helping hand with it, send me a message. You've seen some of the software that I use. You can see the reports. You can validate the stock list that you want to trade. Everyone's got their top 25. You can have access to mine to get you started, but everyone's got a slightly different situation to themselves. So some are going to be lower value stocks, some are going to be higher value stocks. I like to trade stock options. The stocks that I trade have stock options. You can trade lower price stocks, but bottom line is you can validate every stock that you trade and which stock should be in your universe at the click of the button. Again, all my students get access to that software. So again, if you want to talk, hit reply on any of the emails that you get from me. Right, that's it. Before we say goodbye, folks, what's your biggest takeaway? Oh, Randall's very kindly saying if you need to verify. That's very kind of you to offer, Randall. Checks in the post. What was your biggest takeaway today, folks? And I see you watching on you. We're live streaming on YouTube today. I see you watching on YouTube. Pop a comment, pop a like in there. So what was your biggest takeaway? Absolutely, yeah. Steve's is, just wait for the thing to load up. Steve's saying near the close is one of the better times to trade. You're absolutely right. Thank you, Ron. First time here, Ron. What was your first impression? Like everything you see and have seen today. Perfect, perfect. Oh, glad you learned so much, Ron. Glad you learned. What are we? Andrew, so what Andrew saying? Systems can be used in various timeframes. A system should be used in any time frame. And hopefully what you should do, you shouldn't automatically do it. Resisting the urge to go all Captain Flashheart, if you get the reference, you can have a little chuckle. But you can validate any strategy on any time frame. Most of the stocks that I trade have good daily swings. They have intraday swings. You can pretty much dance up and down the time frames. And one of the things that you should be able to do with the algorithm, the software that I give all my students, is it should give you confidence, not just with the strategies of showing today, but like is this stock a good trade? Is this a time frame that I can trade on a regular basis? And it validates and gives you confidence. And certainly that's been my experience as I've developed strategies and systems over the years, well, decades almost. So hopefully that just gives you a little bit of confidence to go and do it. Brett, wait for the trade to set up. Yeah, that's probably, despite all the rules and the systems and the things that we do, that's probably the secret that's not a secret is waiting patiently. We get paid to wait as traders. And so wait for the trades to actually set up. Yeah, and just because you can get in at a better price doesn't mean you should get in at a better price. I think we've all learned that one the hard way. We've all learned that one the hard way. And last one, and then we'll sign off. Zeke, as always, thank you very much. Oops. Have a plan, trade the plan, trust the plan. Yeah, I've learned that one the hard way several times. The last one was about 2 years ago, as I mentioned. It's a painful reminder that we are not smarter than the data says. Like, it's human. We want to stroke our ego. We want to thump our chests and go, I outwitted the markets. We love doing it. It's human nature. But the reality is we're not. We are dumb meat machines. The system, the data, the process, it's proven unprofitable. Why would I want to try and think and on the fly make course corrections? I've learned that the hard way too many times. I'm sure we've all learned that at some point. Anyway, folks, final thoughts. Thank you from the bottom of my heart. Spending some time here today. We could be doing other things. I'm so pleased and grateful that you've decided to spend it with me. I said every week, I am truly grateful. I don't take it for granted that you've decided to spend some time with me. The biggest thing that you can do for me today is go and do it. Go and put it into action. Go and change your life. Go and have an ice cream. Whatever the thing that you want to do is, but just put it into action. That's all I could wish for anyone. If you need some extra help, if you want to go further, faster, if you want your hand holding, if you want to join a community of people who are doing it, let me know. But just go and do it. With that said, let's level up and game over. It's done, Phil. It's done. That's it. You'll be pleased to know that the show's over, folks. You can go somewhere else now. Right, I will be. I was going to say this will be ready to view immediately because we live streamed it today. But nonetheless, it's ready to watch right now over on YouTube. So if you want to take notes, it's ready. We live streamed it. It's there on the YouTube channel. If you're watching on YouTube, thank you very much. Pop a comment below. I will get to it when I see it. And I will be back again at the same time next weekend. Whatever you're up to, make sure that ice cream is involved in your immediate future and go and enjoy yourself over the weekends. Toodaloo, ta-ra, and a bye-bye for now.